Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. I'm pleased that we have Mike Tosaw from Know Your Options. Mike will be the guest speaker, and he'll be talking about trading straddles and strangles using FX options. So I'd encourage all of you at the end of the presentation to go and check out Know Your Options. Mike manages money, and at his previous career, he was with Options Express, and now he's at Know Your Options. But again, Mike knows the options world very, very well, so I'm sure that you'll really appreciate everything that he delivers today. And as he delivers his presentation, please type in any questions that you might have, and Mike will answer all of those questions at the end of the presentation. So without further ado, I want to announce Mike Tosaw. Mike, thanks for joining us at the ISE. Really appreciate it.
Thank you, Steve, and thank you, everyone, for giving me that standing ovation that I got. Just kidding on that one.
Yeah, I heard it.
Oh, okay, good. Wow, that's a good thing. Thank you, everybody. It's always great to be on the ISE website. I'm excited to be here, as always. Steve and I have been working together in different capacities for many years now, and Steve and I often joke to each other that we've done more traveling with each other than we have with our families on the road, and it's always good to work with Steve and doing things with the ISE. I've learned a lot watching Steve present through the years, and it's an honor to get to be his guest on his webinar. So with that, let's talk about straddles and strangles using the FX options. Before we do that, we do need to get our risk disclosures out of the way. With that, we do highly recommend that you read the characteristics and risks of standardized options. This is a document that is available at brokersexpress.com. It's also available at ise.com, and everyone in this you should have already gotten this in one form or another if you're in this audience right now, but if for some reason you haven't, I'll be giving out my email address at the end of this. Feel free to send me an email, and I will deliver this to you free of charge. It's not a huge issue at all on that. The name of my DBA is Know Your Options, and Know Your Options is a DBA of Brokers Express. Brokers Express is owned by Options Express. So basically, what all that stuff means is that I'm an independent financial advisor, and I broker all my trades through Brokers Express, who is owned by Options Express. The other thing that I need to mention is that I am licensed in the United States only. I'm not licensed outside of the U.S., so with that being said, I'll give a website out at the end of this presentation for my services, but I do need to mention I am only licensed in the 50 states of the United States. With that, just kind of what we're going to be talking about today, ISE FX options. The FX options are something that are becoming more and more popular every day, and that this is a product that you actually have the ability to trade through any option-enabled account. If you can buy a call on Google, you can also buy a call on the Aussie dollar, on the Swiss franc, on the New Zealand dollar, and with that, these are all dollar-based. And that there is one out now that is actually euro-based. I believe that one is that one officially released now, Steve?
Yeah, I'm sorry, Mike. There's actually four.
There are four now. Okay.
Yeah, AUM, the British pound, GBP,
okay, I see that over the right.
USD. Those are all what we call the U.S. quote currency. So they're very similar. In fact, they replicate the spot market.
Okay, very good, very good. With that, typically what I use with my clients, we've been using, obviously as you can tell now, we've been using the ones that are dollar-based, in that like CDD, for example, on the Canadian dollar. If you're bullish on the U.S. dollar versus the Canadian dollar, you would buy a call option on CDD, and if you're bearish on the U.S. dollar, you would buy a put on CDD. So Typically, that's just our personal preference as to what we've been using with our clients. But with that, by using this product, you actually get to participate in the foreign currency market with a limited risk, assuming you're an option buyer. So with that, you can have an opinion on where the U.S. dollar is going to go versus any of these currencies that you see on the screen. Everything on here is exchange listed in that you can trade this. You have the eyes of the ISE, so to speak, looking at your trades, in that there's a regulator actually looking at this. That's a benefit of this. This is something that's cash settled in U.S. dollars. It's a European-style option, and you can trade it as a spread. So just like you can buy a bull call spread on Google, Home Depot, or TLT or whatever, you can do the same thing on any of these currency pairs. So it's a really unique product with what it has to offer. For today, what we're going to be going through are straddles and strangles. And these are some points to ponder with what we're going to be discussing today. First off, which way is the stock market going? Is the market going to go up? Is the market going to go down? Is the market going to go sideways? Now, unfortunately, I'm not able to give my guarantee on that in this presentation. But with that, we are going to kind of discuss how you can look at the market and have a more broad picture of doing things as opposed to just looking at what's going on in the U.S. We're going to go over, are you really diversified? Let's say that you own SPY, and that's the only thing that you own theoretically. Well, you own essentially the S&P 500. Does that make you diversified? Well, some people say no. Well, if that's the case, then maybe I should buy some ETFs on British stocks or on European stocks or on Japanese stocks as well. Does that make you diversified? We'll address that in this presentation. We're going to be going over what exactly a straddle is. We'll also be going over what's the strangle. Of course, we'll cover why you would do either of these strategies, the concept of it, the nuts and bolts of the strategy. What's the reason for doing it? We'll go over currency. Why would you consider doing such a strategy on currency as opposed to the market or in addition to the stock market? Why would you do that? We'll go over how this can be done by trading it via volatility or going for Vega, if you will. Why would you consider doing a strategy that's volatility based? How can it be done? Why is it done with the straddle or the strangle? What about delta? Can you do a straddle and a strangle and make it delta based? I say the answer is yes, depending on the way with which it is set up. We'll discuss that. We'll also talk about going for theta, time decay. That's the one thing that we can assure you of in this business. The sun is going to rise tomorrow. And the reason that I can assure you of it is because if for some reason the sun doesn't come up tomorrow, we got enough problems that you're not going to go after me for lying about it for the sun not coming up if that actually does happen. We'll talk about going for time decay with these strategies as well. Now let's ask this question. Where on earth is the stock market going? Is the market going to go up? Is the market going to go down? Where is it going to go? Well, are you a long-term bull? We have been programmed as a society to believe that the stock market is going to go up, and historically it has. Since the Great Depression, the market's averaged around 9 to 10% as a rate of return, even with the Great Depression, 2 world wars, the Korea, Vietnam, the sideways market from 1966 to 1982, the bear market of 1974, the bull markets of the 80s, Black Monday in 1987 when the stock market dropped 20% in one day, the S&L crises of the late 80s, early 90s, the boom time of the 90s, the tech bubble of the late 90s, the tech bubble bursting, and of course everything that's happened recently. We've been through a lot, and through, the stock market has made it as a major asset class that has performed well through all of those bad things that have happened, and good things. So in terms of fighting the long-term bull, over the long haul, it's a difficult fight historically.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.